The silver market just sent a signal that changes everything. While most people are watching the price bounce around $78, three things happened in the last 48 hours that prove we're not in a normal market anymore. We're in a structural break. And if you don't understand what just shifted, you're about to miss the most important wealth preservation move of the decade. Nate Saint here with Peak Life Wealth, helping you protect your hard-earned money from inflation and build real, lasting wealth. It's January 7th, 2026. Silver is trading around $78 per ounce. Gold is near $4,460, and on the surface, it looks like just another volatile week in precious metals. But here's what nobody's telling you. Behind the scenes, three massive forces just collided. The Fed bailed out banks with $17 billion. China's export controls went live, and now the IRS just gave themselves legal authority to seize metals from retirement accounts. This isn't three separate stories, this is one story, and it's the story of a system that's running out of options. But here's the part that should terrify you. The government isn't calling it a seizure, they're calling it a prohibited transaction remediation. Because what just happened isn't about silver going up or down, it's about the government preparing to lock you out. Under Section 72 of the Internal Revenue Code, the IRS can now flag physical precious metals in your IRA as a material risk and force you to liquidate at whatever price they set. If you refuse, your entire IRA gets deemed distributed. You owe immediate taxes on the full value plus a 10% penalty. This is 1933 all over again, but instead of door-to-door confiscation, they're using the tax code. Let me connect the dots for you. On January 1st, China's new silver export licensing went fully into effect. We talked about this. 44 approved companies, strict quotas. The flow of silver from east to west just got choked off. But then on January 5th, something else happened. The Fed injected $17 billion into the banking system. Why? Because banks that are short silver are getting margin calls. When the price moves against them, they need cash immediately to stay solvent. That injection wasn't about the economy. It was about keeping the banks alive through a commodity squeeze. Therefore, the physical market is fracturing. Silver is trading at $75 in New York, but $82 in Shanghai. That's a $7 gap. That gap proves the paper market is broken. Physical demand in China is pulling inventory eastward, and the COMEX can't keep up. But here's where it gets personal for you. While the banks are scrambling and the vaults are draining, the government just made a move that most people missed, the IRS rule change. They can now force you to sell your IRA metals at government-set prices, not market prices, government prices. Therefore, your retirement account isn't yours. You think you own it. You contributed to it, you planned around it, but you don't own it. The government just proved that. Let's look at the numbers. ISM Manufacturing PMI came in at 47.9. That's contraction territory. New orders are falling, but prices paid is at 58.5. That's the toxic combo. Weak demand but sticky costs. That's stagflation. And in a stagflation environment, the government has two choices. Let the economy collapse or print money to keep it alive. They're going to print. They always print. And when they print, your dollars lose value. But now they're also preparing to take your escape hatch, your gold, your silver, the assets you moved into IRAs thinking they were safe. The U.S. government just invested $7.4 billion in a Tennessee smelter with Korea Zinc. The Pentagon holds 40% equity. That means the silver produced there goes to military stockpiles, not the open market. This is resource nationalism. They're securing supply for themselves while locking you out. Here's what most people don't understand. This isn't just about silver going to $100 or $150. It's about the system preparing for a reset. When the dollar loses credibility, when the bond market revolts, when inflation comes roaring back in wave 2, the government needs to control the alternatives. That's why they're targeting IRAs. That's why they're building domestic smelters. That's why they're letting the paper market and the physical market divorce. They know what's coming, and they're making sure that when it hits, you don't have an easy way out. So what do? First, understand your options. If your silver is in an IRA, you need to evaluate the risk. Taking an early distribution means paying taxes now, but it's better than forced liquidation at government prices later. Second, consider holding physical metals outside the system, in private possession, where the government can't easily reach them. Third, don't wait for the mainstream media to tell you this is happening. By the time they cover it, the window will be closed. The real risk isn't volatility, it's being locked out when the system breaks. Go to the link in my bio and grab your free copy of the Inflation-Proof Wealth System Guide. This is the guide I wish someone had given me, and I want to help you the same way. It's completely free. I'm watching things closely and will keep you updated as this unfolds. You now know what most people don't. The next update could change everything, so make sure you're here for it. Stay sharp, stay stacked, and I'll see you in the next one.